And I have just been told that I have been on mute until now. So thank you very much for bearing with me there. So what I will now tell you in real life is that my name is Susan Hayes Cullerton, and I am delighted to be here with you today to host this episode of the ESG and Tech Show. Now, wherever you're tuning in from wherever part of the world, you are very, very welcome indeed. The sun is shining here in Dublin, in Ireland. The skies are blue and the grass is green. So I have to say we're settling into this conversation from a very good place indeed. Now, I want to do the same as I always do every single time that I start an episode right here at VectorVest Live on YouTube. And that is, of course, to ask you where you're tuning in from. It's always intriguing to hear what parts of the world people are joining us from. And I always love to hear where you are sitting right now and tuning into the show. So whether it is live and you're here joining us live at the moment, or whether you're looking at this afterwards, please do comment in the comment section as well. So if you're here live, pop it there into the chat. If you are joining us on afterwards, please do, of course, put it into the comments. Now, while all of those are filing in, and I can see we're getting lots and lots of them, just want to tell you a little bit about why we started the ESG and Tech Show. We started this show because these are the two trends that are likely to underpin the next decade, not just in the stock market, not just in business, but indeed around the world. Technology and sustainability are the two most important aspects of today, and they certainly are what's dominating agendas, whether it's the boardroom table or whether it's in analysis or whether it is conference planning or whether it is decisions about that governments are making about what to support and what to check in on and what to hold back, etc. So for that reason, I thought, and I brought it to the team, that I thought it was important that we do consider and analyze thoroughly what is going on in both of those areas. Now today in particular, what I'm going to focus on is the fastest growing ETFs in the space. Now, I do want to tell you all particularly what I'm going to cover and why. First of all, I'm going to do exactly as the name suggests. I'm going to tell you what the fastest growing ETFs are by price. Okay, so I'm just going to show you in terms of actual return. I'm going to talk about that first because I want to show you where the money is actually going and where we can see prices going upwards. The second thing I'm going to do though is I also want to show you who the biggest ETF players are now in the world. Now, we generally know the top three: iShares, Vanguard, State Street. Generally speaking, people know who those are, and I'm going to show you exactly the numbers behind them, and then I'm going to show you the other players underneath as well. So I just want to show you the fastest growing ETF providers too. But then I also want to tell you about the latest ETFs and the newer ETFs and the innovation ETFs that are coming out and where you can find them. So we're also going to take a look at that also. And then I'm then going to nuance it right down and help you to discover what it is that you're looking for. Because by me showing you the trends in what's happening in ETFs, of course, that's interesting and it is good to see what's happening and where. But it is also important to then consider, well, how can I apply this knowledge to me? How can this help me to be a better investor? So I'm going to show you on one particular ETF provider's website how you can split ETFs into different goals. And then what I'm going to do is I'm going to show you how to analyze ETFs in the vector. We're going to do that in a couple of different ways. What we did was we are going to take a look at the direction of a stock, and when I say stock, I mean ETF, the direction of the stock and its dynamics and its magnitude. So that is telling us whether the buyers are pushing the price up or the sellers are pushing it down. We're also going to take a look at some technical analysis as well, and we're going to look for some divergence in there. And then what I want to do is I do want to take a look at a specific section of ETFs as well, and we're going to analyze those as a case study. Every morning I listen to the Seeking Alpha Wall Street Breakfast podcast, and around about 20 minutes in the morning. Today's one was about the hop, skip and a jump that the markets are anticipating at 2:30 p.m. today. We will know if the Fed do, as at this point 92% of the markets do, which is to pause or skip an interest rate increase at the moment. We will also know the data plot, so we'll know where, or the dot plot, where they are intending to finish the year up on. And the anticipation is that number one is that they won't change interest rates today. based on the CPI rate and a range of others, it looks like that the different elements of inflation are actually being managed now, and it's also expected at this point is that they are going to communicate that they would rise rates possibly one more time this year. So that's what the markets are expecting. We'll know all of that by about 2:30 today. Anyway, I was listening to the Wall Street Breakfast last week, and a couple of times it came up naturally enough, about the fires in Canada and what was then subsequently happening in New York. At the end of that segment, then the presenter of the show, Julie Morgan, then mentioned a range of climate ETFs at the end. So what I thought is, in the interests of us looking at ESG and technology today, what we would do is that we would take a look at some of those ETFs, and I've already put them in a watch list, right? They're already in a watch list on the system. And then what I'm going to do is, in the program, I'm actually going to analyze those for you as well. So I'll show you what the climate ETFs are. Now, quite a number of them are at a buy rating, and they're having very good progress, and a range of other things. We'll get to all of that. So fasten your seatbelts, settle in, and this episode is going to be approximately an hour, and we're already 7 minutes in. Now, let me go over there and take a look and see where you're all tuning in from. And if you haven't answered over there yet, please do pop it there into the chat. Let me see. I would have tried VectorVest, but I won't now because they're advocating ESG. Well, James, let me tell you that we're not advocating anything. It is simply, as I've just explained there, ESG and technology are two of the biggest trends in the market, but indeed in the world, that are underpinning the next decade. That's the reason for that. And I want to show you through an investing lens how to. Okay, Franz Properties said you are tuning in from Dallas, Texas. Live Life is there too. Fireblazer is joining us from Toronto, Canada. Lyle McKee is in Camrose, Alberta, Canada. Jacqueline is from Minnesota. Maria says hello, VV Nation. Hello, Maria, and you are very welcome. Who else have we got here? Kind Thus is from Mississauga in Ontario. FIFA is joining us from Dallas. We have quite the showing from Dallas, Texas today. I will say my husband's cousin is over at the moment from Austin, Texas. So I don't know if that's in any way relevant. But anyway, just want to share that with you. Bruce wants to know, can any of you understand her? Well, Bruce, I would like to put that question to the rest of you too. Can you understand me? Yes, indeed, I have got an Irish accent. And also I'm from a part of Ireland. My dad is from West Cork, which is a part of Ireland where it can often be characterised by people who speak quickly. So believe me, I am actually trying to slow down. But yes, indeed, I would like to know the answer as well to Bruce's question. Can anyone understand me? Let's see what you say. Eric says, right, interesting sentiment there, Eric, about ESG, right? I will bear that in mind. Yitz is joining us from USA, New York. Huey is from Fargo, ND. George is from Garza, okay. Oh, Jorge Garza says hola, okay. Hello, Mike, you're joining us from Edmonton. Manju is from San Jose, California. Fireblazer said, okay, he said, this is an ESG show. Very good, just show me the money. Well, I'm going to be directing you right around there for sure. David says, I just want to know what stocks to buy. Well, David, I'm going to show you how to analyse that as well today. Maria says, cheers from Maine. TT, oh, joining us from Wales. Oh, very good. You're very welcome indeed. I'm not sure we've had too many people from Wales on the show. You're very welcome. Stephen is here from Chattanooga, Tennessee. 360 Mortgage High tuning in from New York City. Joe Mama says, Regina from Saskatchewan. I really hope I got that somewhere right. Martin is joining us from Port St. Lucie in Florida. Merrick is joining us from Las Vegas in Nevada. Now, Martin says, yes, very well. Now, there you go. Martin can understand me. TT Wealth says, yes, I'm a fellow Celt. Joe Mama says, easily understand you. DG says, I'm from Greenwood, Indiana. Burwood says, Lansing, Michigan. Tito says, hello from a train somewhere in Belgium. Often been there myself. Stephen uses Google Translate. Can that keep up is the question. Siberia Visitor says, with each broadcast, your Irish accent is growing on some of us. Well, I'm delighted to hear it. Many more to come. Lyle says, I like your accent, good for you. Fireblazer said, I'm not listening. Oh, okay. Right, well, that's probably how you're going to get most of the value. Urza said, would this be good for fast trades? Could I use your advice on brokers like Pocket Option, etc.? Okay, Ezra, let me take that on board then. VectorVest doesn't offer advice. What we do is that we give insights and information around the different aspects of the stock market. So what I would suggest that you do is that you can take a trial and see, but in particular what might be of interest to you is our robo trader as well. So that is a way you can connect what VectorVest says to a trading account so that then it can be automated. Just for a moment, I'm going to ask Joey, would you mind popping the link for the trial into the chat so that then Ezra can take that and take a look at it. Okay, Ezra is joining us from Manchester, New Hampshire. Strawberry Cookie says Joseph from Sunrise in Florida. And Joe Mama says, I'm not going to say it again in case I try it again. Any idea on Carvana or stocks to do options and trade? Now DG Streamer. Yes, personally speaking, I do options all the time. We can certainly take a look at that if we have time. And Nick says hello from Sebastian, Florida. And FIFA says, please give me the intelligence that will last me a lifetime. Well, FIFA, similarly, again, if you want to take a trial, then you can walk through the episode here with me. All right, great. Thank you very much indeed for that. As I say, I always like to hear, always like to hear where people are tuning in from. So please do, if you haven't shared your location with us already through the chat, please do, or if not, through the comments. Okay, let's now, what I'm going to do is I'm now going to change my screen. And I'm going to show you the fastest growing ETFs of the year. Okay. Here we are. Okay. So here we are. Here we've got the best ETFs of 2023. So you can see here the first things first there is we've got Global Digital Assets Equity. Okay, so that one is up 100% so far in 2023. We have Sole Active Blockchain. This one is up 84.55% this year. We have New York Stock Exchange FactSet Global Blockchain up 71.47%, and we have Solana here as well. And that is up 56.36%. When we take a look at the top 50 indices for ETFs in 2023, you can see there we have digital assets and the top four there that you could see. Also cryptocurrencies, equity world, technology, social, environmental. This one here is up 54% so far. And as you can see, particularly in the semiconductor area. Got cryptocurrencies again. We got cryptocurrencies again, equity world technology, Solactive ETC, group digital assets and blockchain, equity world technology, back to the semiconductors. We have Vinter, 21 shares, crypto basket, if I keep on going, Ethereum, Grayscale Future Finance, Ball Metaverse. That's the one that people keep dismissing. And I have to say, I think I might have told you this on our last one. Our last episode, and that is I heard somebody recently say that it's not that the metaverse is dying, it's that the hype around the metaverse is dying. I think that's a particularly interesting one also to bear in mind. Right, you can see there, Equity World, iStocks, Access, Metaverse up 41% so far this year, and so on. Okay, so the place in the place that I'm looking for this is just ETF. And if you simply take a look for market overview, the best ETFs, that is where you'll find what I'm showing you. So let's summarize this for a moment here. Number one is that it's technology and ESG. ESG, imagine, they are the two that seem to be really driving this, particularly technology. As you know, a lot of the really big tech stocks had a very difficult 2022. Started to turn a little bit all right in November 2022, but had a very, very difficult time. Like I've also mentioned about when you look at nuances within technology, whether it is the metaverse or different areas of technology as well, there can be some subsets there that are gaining a lot of momentum, including blockchain. Now, blockchain, can I just give you a 1 minute explainer on this, right? Just a 1 minute in explainer. And that is that blockchain is the technology that underpins a track and trace system. That's the way in which to really describe this. Now, let's say I'm going to put money into the bank, right? So I take money out of my pocket and then I put it into my bank account. Now, who knows that I've done that? Well, the bank knows. And also, if I was to tell the bank that I've done that, let's say that I have sent them across money, I would need to send a proof of that so that then they could see that that has actually been done right away. Now, on the other hand, if I take that out, right, if I take money out, well then similarly as well, I have to go back through that process. Whereas with blockchain, there's a range of things that are different. Number one is that if I transferred money from A to B, number one is that I am not a person, I would be a number. And then secondly, this information about that transaction would be available to everybody. So in essence, the transactions are anonymized and then they're available to everybody. And then what happens is every 10 minutes, all of those transactions are put into a block, and then that block goes into a chain. Then back and back and back and back and back and back the blockchain goes. It's basically a track and trace system. That's what blockchain is. The payment for creating the digital seal in between those blocks is called in this case, in the case of blockchain, it would be is Bitcoin. Bitcoin is a cryptocurrency. Cryptocurrency means that it's not something that's backed by a central bank, unless it's a central bank digital currency. So instead then what happens is that if I was to transact with you, well then that is only going to have value if you deem it to have value. And that is what cryptocurrency is. It is a currency transacted between people as distinct to fiat currency that would be represented through the central. So that is just to give you an insight into, and I see there somebody said, oh, you give insights. Is insight the opposite of outsight? It is simply insights. Interesting, this character tells me he's not listening and seems to be listening very close indeed. So the point I'm making here is that you need to make sure that when you're looking at something like this is distinguish the cryptocurrency, and which is the payment for participating on the blockchain, right? For people who are actually putting these blocks together. So as you can see there is several ways there in which we can see what is really driving this. We can see a lot of technology, and then also some of the more ESG elements are in there. Cryptocurrency, metaverse, technology broadly, a lot of that is there, what is driving the bus at the moment. Now, what else have we got? Harry says, I live in Duncanville. In case you're not familiar with Duncanville, Dallas is one of our suburbs. Okay, Kathy is joining us from Taiwan. And also, Trader Matt says, accent makes me want to have a Guinness beer at 10 a.m. in the morning. Wow, my accent is really causing a lot of conversation today, isn't it? Okay, now let's take a look here and see who are the top leaders of the dashboard when it comes to ETF league here. Okay, now what I just want to zone right in here and just take a look at who the biggest players are. Okay, iShares is up there at 2.3. Now that is 2.3 million, but it's million. Just okay, so let's just bear that in mind. These numbers are very, very big. Then after that, then we have Vanguard, and then after that there is Spider. Now Spider is Standard & Poor. But look who is right up behind them. You've got Invesco, you've got Schwab, you've got First Trust, you have got JP Morgan, Dimensional, ProShares, WisdomTree, VanEck, GlobalX, Fidelity, Goldman Sachs, Direxion, Pacer, Avantis, FlexShares, X-Trackers, PIMCO, Innovator, ARC, BlackRock, etc. Okay, so they are who the bigger players are, and that is as of this week. They are who the biggest US ETF issuers are. Okay, now I also wanted to point out to you, for all the talk there is about the bond market at the moment, and since, when I talk about the hop, skip and a jump that is potentially happening today at 2:30 p.m. If you listen to Bloomberg at the moment, if you listen to any markets-based conversation, there is a constant focus. Will rates rise? Will they rise? Will they be put on hold? What's going to happen in the UK? What's going to happen in the ECB? What's going to happen in the People's Bank of China? What's going to happen in the Fed? Over and over and over and over again. Now, with all of this talk, naturally enough, then the attention changes to the bond market. And particularly in the US as well, when we've seen Silicon Valley Bank, we've seen First Republic, etc. So what I did was I just, for the crack, as we say in Ireland, what I did was I took a look then and I compared if I was to focus on two different ETFs, right? One is this one. I just took a look at this here, and I took a look at the iShares Euro High Yield Corporate Bond UCITS ETF. Now, let me tell you something about us based here in Europe, is that if I am a retail investor and I'm based here in Ireland, and as I'm sure you all know, Ireland is in both the European Union and the Eurozone, I can only invest in an ETF if, let me just show you, if there is this badge here on it, UCITS. Now, I will say this for anybody, the Tito who's on a train somewhere in Belgium, you're likely one of these people too. Let me see, who else have we got here? Who else have we got here that I just want to give? Yes, TT Wealth as well, who's joining us from Wales. It's quite likely that you could be in a similar position, and that is that you would also need to be that you need to, you can only, as a retail investor in Europe, buy a UCITS ETF. Now, if I want to buy an ETF in, that's right. Thanks, TT Wealth. If, on the other hand, if I'm in the US, and this is going back to somebody there who asked me about buying and selling options. If I am somebody here in Ireland and I sell a put option on a US ETF, which I've done, and then after that, the put option is put to me, whereby, of course, the option buyer has the right but not the obligation to sell to me. If they do go on to sell to me, then I go on to buy it. That has been a way in which I have bought them in the past. So while direct access to an ETF in Europe, it needs the UCITS badge. If you go through the options route, that sometimes can correction. Okay, Percy says, Chicago, USA, welcome, hello and all. Thank you for the info and education. You are most welcome, Percy, delighted to have you. Jay Kirby says SOXL is up quite a bit. Yes, indeed. And FIFA said, would we be able to find this on the picks in the app? Okay, what I will say, FIFA, is I haven't got into the VectorVest program yet. So as a result of that, I do just want to make the point that when we do get into the program, then I'll be able to go through everything there with you. What I've just shown you there is a range of different ETFs, and based on justetf.com. What I have done, I don't know if you were with me right there at the beginning, but what I have done is I was listening to the Wall Street Breakfast podcast last week at Seeking Alpha. They listed a range of climate ETFs, and I brought them into VectorVest then to analyze. So if that's what you're asking me, is can you analyze ETFs from anywhere else? Can you bring those across into the app? Yes, you can. And I will show you how to do that. Okay. And who else have we got here? Other people are commenting in various different ways. Please do keep the conversation going. It's always good to see that. Now, in all the conversation that there has been about the bond market, and particularly about the high yield market or the investment grade market, what I decided to do was I said, right, I'm going to use ETFs to compare and contrast performances of two different asset classes in two different parts of the world. So this is iShares, and if I just pop back over here, iShares is, of course, the largest ETF provider in the world over here. Okay, so it is the largest ETF provider in the world. So I picked a UCITS ETF here, and as you can see, year to date, this particular ETF has delivered 4.91%. Okay, now for any of you who's unfamiliar with an ETF fact sheet, can I just walk you through this so that you know what to look for if you're analyzing them for your own consideration? Number one here, this is the ticker code right up here. I can see that this ETF is accumulating, and if it's accumulating, then that means that it's reinvesting its own distribution back in to buy more shares. Then down here we have diversified exposure to sub-investment grade bonds, known as high yield bonds. For anyone who's not familiar with the term high yield bonds, high yield is non-investment grade, or the slang term you might be familiar with is junk bonds. Direct investment in corporate bonds across sectors like industrials, utilities and financial companies, and euro-denominated high yield exposure. That's the reason I picked it, is that is something that I could buy being based where I am, and also that would be where my currency is. Okay, so if I just keep on going down here, okay, and I just would like to go to see the annualized return for this. So as you can see, very, very weak, I suppose you could say, weak performances here in the past year. It's been 1.3%. Now, admittedly, the last year you would have been outperforming the general stock market at that because of last year's performance, but over the past 5 years, 0.8%, so like very, very low. And 297 million in the fund. That's of net assets, but net assets, the fund is much bigger at 5.22 billion. Okay, let me keep going here. Total expense ratio is at 0.5%. Okay, bear in mind the liquidity of buying and selling these could be a particularly tough one. Okay, let me just keep going here. What else have we got going on? 636 bonds is in here, and sustainability characteristics, it is got a single A. Scroll on down here and we can see they're your top issuers. Consumer cyclical, communications, consumers non-cyclical. Geography is, broadly speaking, Italy, France, US, Germany, Spain, United Kingdom, Luxembourg. Maturity is mostly 3 to 5 years. That's the biggest weight. And the credit quality then, of course, as we can imagine, is pretty low. Okay, so that is what you would do if you were looking for a bond ETF. And let's compare this then to the broadest ETF that I could find, and that's this one. This is the iShares MSCI World UCITS ETF. Again, so for anybody who is in Europe or anybody who is, of course, outside, the UCITS badge means that it is suitable for a retail investor. Now look at this. That year-to-date return is up 13.49%. So the stock market, despite the fact that traditionally the stock market would be seen as more risk than the high yield bond market, despite that, it has delivered a far greater return. Okay. Now, if I come down here to annualized, okay, so you can see again the last year, little enough, but over the past 10 years, the return is 10 times higher at 8.4%. Now, does this surprise us? No, not really, because the stock market offers more risk. And in order to, if it offers more risk, then the likelihood is, of course, that it will be compensating that in terms of it. Okay, let me just keep on going down here then. What sort of things do we need to look at? Interesting. Total expense ratio is also at 0.5%. I can show you the ETFs with the lowest total expense ratio in the world if you want me to. As you can see, domicile is in Ireland. A lot of the iShares are. 1,512 stocks. PE ratio of 18.28. Single A rating here as well. And if I keep going down here, Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, Meta, United Health, Berkshire Hathaway, big humdingers of companies. Sector, IT, financials, healthcare, consumer discretionary. And the geography here in this case is 66% in the US, 6 in Japan, 4 in the UK, 3 in France, 3 in Canada. So there you go. That I just wanted to give you a sense there of if you are looking at an ETF fact sheet and you haven't looked at something like this before, that generally speaking would be the key things. What is it? What has its return been? Now, of course, as you all know, return in the past doesn't predict it in the future, but how many stocks does it have? What does it give exposure to you for? Where geographically, what's your exposure? Sectorally, what's your exposure? What companies or what bonds do you actually have? And then there's other nuanced elements that you would get into then about whether it's tracking the index with product or whether it is swap based, etc. But broadly speaking, what I've taken you through there would be the main. Now, moving on then from there, I just wanted to so to summarize that, if we look at the high yield bond market, let's say in Europe, and you compare it, the stock market of the world, definitely the stock market of the world would have delivered a much better performance. Now, why is it that people choose to buy ETFs in the first place? Well, that is what I think iShares, I'm in the way. iShares does a very good job of explaining why. In some, and actually, can I add some nuance to this as well? People buy ETFs because sometimes they don't have the money to be buying various different stocks individually. And it's a great way to get started, either in an environment if you're starting off with low funds, or if you don't know an awful lot about a market and you don't know which particular stocks to buy, but you'd like some exposure there. I remember I was on holidays in Vietnam, I think it was 2016, and I said, wow, I am really intrigued here at the pace of business development, the pace of construction, listening to the accents, there we go again, listening to the accents of the tourists and where they were coming from. I thought, I don't know one listed Vietnamese company from another, but instead I bought the Vietnamese ETF instead because it gave me access into that. It's brilliant, of course, from a diversification point of view. You saw there in what I showed you, the last world ETFs, about 1,500 stocks in it. And there's lots and lots of nuances within ETFs as well. So they can be very, very useful for that. But also, as you can see here, iShares points out different things that you can do with them as well. If you want to focus on income and seek dividend and interest payments from stocks and bonds, there's a series of ETFs for that. If you want to use short-term investment strategy to pursue income while maintaining liquidity, that is one of the things we will be checking out in VectorVest. We will certainly be analysing an ETF's liquidity. Navigate risk if you want to hedge against potential market pitfalls, seek to minimise volatility, or of course hedge a currency risk too. Aim to maximise growth to pursue long-term opportunities in the stock market, and then are also to go sustainable. They have a range, they all do now, but sorry, not them all, but a lot of ETF providers have, they're ESG focused, or they're screened, or they're thematic in the area of climate or something. So all of those are pretty much a summary of why people choose to go down the line of ETFs at different stages in their investing. Now, before I get into the program, I want to do one other thing, and I just want to show you this. And this is this news was just released yesterday, is one of a latest ETF. And I wanted to give you a sense of like, what are the new ETFs out there? And for this, I'm turning to etftrends.com, and I want to give you a sense of the type of ETFs that are coming on the market and why. And why is because they're demanded. I mean, that, and if they're not demanded, well, then of course they're not going to last very long anyway. But I just want to give you a sense of that. And we're back to that more ESG angle again, and that is the electric vehicle market. So Defiance ETFs has launched the Defiance Pure Electric Vehicle ETF, which targets pure exposure to electric vehicle manufacturers, and this ETF provides direct and concentrated access to fastest growing EV companies. So EVXX seeks to track the performance of the selective pure US electric vehicle index, and the 5 largest electrical vehicle manufacturers by market cap make up the index. The shares are equally weighted on a quarterly basis. So that is a relatively diverse way of gaining access to the electric vehicle market. And again, that is something that is gaining, of course, it's gaining a lot of traction around the world. But when you look at it economically, according to Defiance, 14% of all new cars sold were electric in 2022, up from 9% in 2021. That's more than 26 million electric cars worldwide as of 2022, 60% more than 2021. And I mean, that's off now a little relatively low base. So Defiance expects EV sales to grow 35% this year and projects revenue to reach 561.3 billion. If you want to know the other trends that are in there, just take a look at that now. I'm just going to refresh this page in case there's anything new on it since I looked at it last. That is the latest article. Yeah, looks to be that I'm right up to date. This is the latest article over here. New Defiance EVXX ETF targets fastest growing electric vehicle companies, as you can see. Now, Chris asks a great question. Are there liquidity risks with ETFs similar to stocks? Yes, Chris, and that's what we need to analyze. Because if you buy an ETF and you can't sell it, or you buy an ETF and there's a big difference in the bid-ask spread, it can make a very big difference then when it comes to your return. So yes, you are right. You are spot on there. Okay, if we look at the other trends that are happening here, Franklin Templeton launches a multi-asset income ETF. Goldman Sachs launches Market Beta, Total International Equity ETF. Allianz IM introduces June buffered ETFs. Global X-List Carbon Credit Strategy. Craft Technologies launches AI Pilot, US large cap dynamic beta and income ETF. So you can see there's a focus on internationalizing, there's a focus on AI and technology, there's a focus on environmental elements as well. And can I tell you one more? Because I would like to mention this. Look at this one. Look what BNY Mellon is doing. Boom. BNY Mellon launches Women's Opportunities and Innovators ETF. So should I ever list a company? I do intend to be in that. Okay, now moving on then, let's now get right into the program. And what I would like to do is I would like to now help you understand about, from an investing point of view, now that we know the fastest growing ETFs, we know the newer ETFs, we know the big characters that are in the market. We also know the difference when we use ETFs as a data-driven tool to compare asset classes. Now that we know all of that, let's now get right into the program and take a look at the there. Okay. And so now that we are in the program over here, this is a watch list that I created for you earlier. And let me just explain exactly how I did this. And this ties back to who? FIFA asking, would we be able to find this on the picks in the app? Okay, so like I mentioned, each of these ETFs had been listed on the podcast after the Wall Street Breakfast podcast. And from there, I took the list of them and I went in here and I created a watch list myself. So here's how I did this. So I would click this button. Here we create a new watch list. Now, I'm just going to do this as a test here for you today. Right, so I'm just going to create a watch list here and press add. And then when I go in here, I can then add in the ticker code that I might want in here. Now, do you know what I'm going to do? Because I think it's just interesting to just show you this. The regional banks, right? Everyone, the ticker code I'm looking for is IAT. I'm just going to take a look in here at the regional banks ETF. This has been the one that so many people have been talking about since the beginning of this year. This is the one that has an awful lot of nervousness baked in. So if we were to take this particular ETF, right, and let's say that I am a VectorVest subscriber. By the way, I just want to point this out for any of you who've just joined us. The link to the trial, so that if you want to go along with me and to do exactly like I'm doing, there's a trial for only 99 cents. The link to it is up there, and you can follow me the whole way through this episode. Of course, any of you that do have access to VectorVest can simply follow me in this episode anyway. So what I've just shown you how to do is to create the start of a watch list. I've simply created a watch list, and now I can add ETFs to it, and I've just shown you how to do that. You can put your the ticker code up here. Now Jay Kirby, for example, here gave me FNGU. Here we go. Okay. Oh, that's an interesting combination. Okay. There we go. It's got a buy recommendation there now. That's interesting. If any of you have any other ETFs that you would like to just pop in here so that we can take a look at them, please go ahead and do that. Now, I did notice, just while you're getting any ETFs ready that you would like for me, oh, Strawberry Cookie here has TSLL ETF. Is this a great one? Let's take a look here. TSLL. Direction Daily. Okay, I'll pop that in there too. I'm just going to pop back up through the different comments up here. And somebody did ask here, is this being recorded? Yes, it is. It is actually being recorded live. Okay, what else? Barry says nail. Okay, let's take a look at that. So this is how you create a watch list in VectorVest. I'm just going to pop one over here. Nail, N-A-I-L. N-A-I-L. Okay, so we have that as well. And Maria says METV, Maria. Okay, METV. ETV. Okay, so you can see there, as people have been sending me in these ETFs live, you can see how I've been populating them. So anybody who wants to go and create a watch list, that is precisely how you do it. You go into Viewer, then you pop down over here to Watch List Viewer, and Strawberry Cookie, already Maria has been there before you. And then, as you can see here, I created a new watch list, and then after that, I just started populating them. Interestingly, of all of the ETFs that have been sent in, they all have buy recommendations. They all have VSTs, very strong VSTs. A VST, for any of you who's not familiar, is value, safety, and timing. Value is long-term price appreciation potential. Safety is a stock's consistency. A stock being an ETF as well, of course. A stock's consistency and predictability of financial performance. And P is for timing. That is the stock's direction, dynamism, and its magnitude. Okay, so how much is it moving in either direction? So as I take a look here, I'll just take a look here. What have we got going on here? Now, the one that I was going to show you here is the iShares Dow Jones US regional banks. And we also have a Roundhill Ball. We have This looks like Direction DDHSB3X. This is telling me that this is levered by 3 times. We have Direction Daily. And we have BMO, Rex, Fang. I'm guessing is that Facebook, Amazon, Netflix, and Google 3X? I don't know. Now, I don't know because I'm not familiar with it, but let me show you how I'm going to become familiar with it. Right click. And let me go to View Full Stock Analysis Report. This is it's the Fang Plus leveraged ETN. Leveraged ETN is different. That's an exchange traded note. So that is what that particular ETF is referring to there. So that is how you can go in and you can take a look in any case of these at all. You can right click Direction Daily here. Well, yeah, I have a good idea what that is. Let me just take a look and see. View Full Stock Analysis Report here. So what this is the Direction Daily TSLA Bull 1.5 X shares ETF is an ETF incorporated in the USA, and the fund seeks daily investment results before fees and expenses of 150% of the daily performance of Tesla, TSLA. Okay, then if we have down here, again, I'll just do this one quickly. I right click, get the stock, or get the ETF here. And this is Direction Shares ETF Trust. Direction Daily Home Builders and Supplies is Bull 3x shares. Bullish means that it is gaining exposure to the shares on the way up. Okay, and as distinct to short, which would gain exposure, short exposure to the index. Now, what indicators would we use if we want to analyze ETFs, right? First of all, RV and RS over here, they don't work. And the reason they don't work is that we're not looking at a company's long-term price appreciation potential, and it doesn't have its own earnings. So we can't look at its consistency and predictability of financial performance. So instead, one of the things that we would look at over here, we have RT. And RT is simply a measure of the direction of the stock. Again, stock or ETF. The direction of the ETF, how fast it's moving, and the dynamics in which it's doing. So the direction of the stock, the magnitude of that, so how much is going up or how much is going down, and the dynamics of it as well. FIFA said, will this be on when you finish the episode? Will you be able to go back to it? Absolutely. We are recording it live and it's automatically being recorded to YouTube as we go along. So yes, indeed. You can even pause me and go back and I'll still be here afterwards. So yes, indeed, this will be right here for you. So RT is one of the indicators that we would look for here. So what I can do is I'm going to change this. So now what I've done is that I have ranked all of the ETFs here now in order of RT. But I do want to make one point. When the market is going up, the likelihood is that anything that's leveraged is going to move quickly. And two of these are leveraged by 3 times and Direction Daily is levered by 1.5 times. Beware of that. Because what I wouldn't do, if any of you were here at any other episode, what I wouldn't be doing is I wouldn't be showing you stocks that some of them are leveraged, some of them are not. And that's the thing I do want to say to you about looking at ETFs at VectorVest is several ETFs are levered. So when you're looking at RT, then that also needs to be factored into the equation, because if that turns, like if the FANG Plus stock turns, if that's going down, you could imagine, actually, let's not imagine. Let's go and take a look at this. Let's just take a look at the graph here. Let's just see what that was like last year. See, there you go. This ETF was at 487.30 all the way down to, that lost 90% of its value last year, 90%. So that's the thing I do want to point out about levered ETFs is that when you're dealing with a lot of leverage, things can move very, very, very quickly. Okay. Now, I'm just going to delete my test now that I've shown you all how to create that watch list. Delete that. And what I'm going to do is I'm going to pop on over here to my climate tech ETFs. Climate. Am I looking at the right place? I am, yes. So I put this together. So if any of you go into VectorVest now, you won't be able to find this because I've put it together instead. These are 5 different ETFs. If any of you, please do feel free to take a look at them there if you would like. These are the ones that I found in that podcast, like I mentioned. So interestingly, the top one here is a vegan one. Then we also have MSCI low carbon. We have engine number 1 ETF. We have the JP Morgan climate one, and then there's the X Trackers carbon. So how do I take this information, think about it, and then see which one of these might suit me? Can I go back to Chris's question? First and foremost, I would like to see what the liquidity is like. Now, Chris, I stumbled across something that I didn't want to see a little while ago. And that was if I graph them all. No, graph select. Graph them all. Oh. All right. Now, if you take a look here, and I didn't have this on either, here is a giveaway sign of low liquidity. Not that one. Not that one. Well, that one is early, but look at that. Look at that graph. See? See the way that graph is very, very choppy? It looks like it's very light, as if there's bits missing out of it. That is a sign that there can be very low liquidity there. Now, if I put on, I'm just going to add on here average volume. So I'm going to add a parameter. I'm going to go down here then to price volume. over here to average volume, toggle that on. There we are. So now you can see the average volume here is that, and the average daily volume is over 30 days. This is 651 shares, Chris. And just so you can see here, this is very, 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 very small smidgen of liquidity. So what I can do is I can scroll over here to the right hand side and I can say, well, what I do want to find, I want to find the volume being something better than this. So the biggest volume that I can see here in this case is NZAC. NZAC is MSCI low carbon target. So in this case here, then this might be the one that I might take a look at from a volume point of view, or else I might just take these others out. I might take out these, let's say anything that is lower than 1,000 shares a day, I might take that out, like the one that I had pointed out. So that is something that I can do, and I'm going to show you how to put together a search around this anyway, Chris. Okay, so I would look at RT, because when I'm buying an ETF, what I want to make sure is that the momentum of this is moving in the right direction. But the other thing that I want to point out to you here as well is that I also want to make sure that I have a nice perhaps it may be in some of your cases. I also want to make sure that I may have a nice dividend yield here as well. Perhaps that is something that So in the case of EMCR, we can see here that we have a dividend yield of 2.1%. And I can also see that there is a pretty significant dividend safety with that. So that is also maybe something that I might want to see. Some of you, and there's a lot out there around, particularly growth ETFs and growth ETFs. Some of them can generate income, but of course a lot of those would, if it was a growth ETF investing in a growth stock, a lot of the time the dividend would be reinvested back into the company as opposed to. Okay. Now, what I would do then from here is then I would also take a look at the technical analysis within these companies. So I'm going to move on. I'm going to start off now. I'm going to go back into the program and I'm going to look very, very generally into ETFs, and then we're going to wrap everything up with a search at the end. But what I'm just going to do is, what if I didn't have a list of ETFs in my mind that I wanted to look at, like I've done today? Where would I start? Okay, let me go back here and let me go back to the viewer home. So I'm going to log into my system. Okay, I'm logging in here, logging into the system. Here's my home page. Now I go over here to viewer, and then I come down here to I would agree, by the way, they're not enough volume for me either. And this is why I want to take you into the broader aspect of the program, and let's take a look from there. But it is important that you know how to create a watch list, and if you get it from an external source, like the one I mentioned, that then you know how to go in and analyze them. So I'm now going to come down here to ETF viewer. Now, Mike, let's just take a look at these. These are the really big ones. Okay, these are the really big ones out there. Look at these volumes. See here, we've got plenty there happening at Direxion, plenty happening here in Direxion Daily. So there's certainly an awful lot of volume out there in some ETFs. Now, over here, this is what I do want to say though, is that I do want to point out that if you don't like leverage, and if you don't like shorting, well, particularly shorting when the market is going down, then looking at this can be a relatively different exercise, because you can see here we've got CMO Rex Fang 3X here, micro sectors Fang. If I right click view stock analysis report, let's see, is there any leverage in this? There is, of course. And this often is the challenge when you're searching for the fastest growing ETFs, is that, trying to find my mouse, oh, I have it. If you're looking for the fast growing ETFs, of course the fastest moving ones are going to be the ones that are leveraged, because they've got leverage. I'm not a person that looks for that. I like a rock steady Eddie ETF that I can leave and that I don't have to worry about if it goes the other way, is that then it can be really, really hurtful. But this one here, microsectors FANG and innovation, is 3x leveraged ETN. It's an exchange traded note based in the UA. In the USA, it tracks the total return of the Sol FANGT index on a daily compounded 3x leverage basis. Of course, it is moving quickly. And well, so far it's up 1.79% today. This can be the hard part. If we're looking into the ETF viewer, I do want to reinforce the point that you are going to see something like that happening, where your views are going to be influenced. They are going to be influenced then from the perspective of of the leverage. So I want to show you a little part of the program. This is where I'm now going to get into the searches, and I'm going to wrap everything up over the next couple of minutes. If you go into Unisearch and then you go into ETFs, there's lots of searches in here, right? Obviously, the green arrow up is bullish, the red arrow down is bearish. But if I was, for example, here, and I'm going to go into best performing ETFs confirmed, first one. So what this says is this strategy finds ETFs that are currently rated a buy or a hold. They are sorted so that the stocks with the highest combination of RT and CI come to the top of the list. This search is intended to be used during a confirmed up situation. And what this does is it's focusing on ETFs. The stock recommendation is either a hold or a buy, so that's what we can see here. The industry group does not include short. The stock price has to be greater than 1. The average volume, here you go now, Chris and Mike, is over 100,000, and the stock exchange is various others. They are what they are. And also then the stock watch list can't be contra ETFs. Let's run that search. Okay. Now, as you can see, we still have some leverage in there. Now, that's fine for people who like leverage and people who are going to be using these as daily trading products as distinct to more longer term investors. What I do want to point out is, of course, is that this is something that would be connected in with a confirmed up call. So we can see here we have iShares US Home, we have JP Morgan International, we have JP Morgan Japan, no there either. And we can see some of these are having a very strong day. Granite shares, again, a 1.5 emphasis here. So if we are going to go in and analyze these, let me just take the bottom 5. Oh, Wisdom Tree as well. I think that's Wisdom Tree Japan. Right click and let's view stock graph. Now, the average volume, I'm going to take that off. I don't want to nuancing my view here. What I'm now going to look for is RT, and this is why I have been bringing it back to this all the time. What I can see here is I can see obviously very strong performance. The $64 a share in the very beginning of the trading year, going all the way up then to $82 by now, around about a third of a performance. So what I would be looking for here is I want to see, in this case, I want to see the RT rising, and there is picture perfect as regards RT. You can see here that the momentum is continuing to rise. Up here we can see that the share price is diverging away from the stop, STOP, the stop price. So we can see here that that's where the buyers seem to be continuing to push it up, and today it opened at 82.92, currently at 83.10. Okay, so that would be the sort of technical analysis here that we, now there's more that we can apply certainly as well. Now, I haven't spoken to you yet about the comfort index in this episode. Lots of you who've been here before will know I'm a big fan of this. The comfort index is an index, or it is a method of analysing a company's long-term, or its ability to withstand severe and or lengthy price declines. So its ability to withstand severe and or lengthy price declines. So what this does is it shows you above one is favourable, below one is unfavourable. Above one means that it has the ability to withstand severe and or lengthy price declines. What we can see here is that the CI, comfort index in the stock, is in a beautiful trajectory. Okay, if we then apply that same scenario down here to iShares US Home ETF, we can see something broadly similar. Now the RT is broken above one. The RT hasn't as much momentum behind it. That's okay. That's okay. As long as it moves in the right direction, it's okay. But it's just interesting here to watch that the RT crossed over 1 on the 10th of April 2023, and then, as you can see, onwards up it goes, and then the CI down here at the bottom crossed over 1 on the 12th of April. Now, Mike says, I like to add 5 and 40 RT moving averages. Okay. Let's do that then. So I'm just going to show you how we could do. First of all, I need to move me out of the way a little bit. Now, ironically, I'm actually moving. It now looks like I've my back to the screen, right? But let me just show you how to do this. I can't show you if I'm sitting in front of it. Right click, add a moving average. And what he said was an RT moving average. Okay, I'm just going to take that as a simple one. So if he takes a simple 5-day moving average of the RT, that's 7. Another 2. Okay, let's put that on. And I'm also now just going to right click 40-day, I think you said. Here we go. So by doing that, then we can see in here how, now I have to click it on. I have, but it's in red. Okay, let me change the color of that. Change it to blue. Purple. Interesting. Interestingly, I've done something wrong. I put on a 40-day moving average of the price. I wanted to put a 40-day moving average for T. Oh. Now, here we go. Thank you indeed. Thank you, Mike, and thank you, Chris, for spotting exactly what I was doing there. That's an interesting, that is an interesting thing to do. So I trust, Mike, what you want is it to be in between the two, or do you want the RT to be above? I'm wondering whether you use this as a channel or whether you want it to be above, or also whether you're comparing the 5 and the 40 to see when they cross each other. Because there's a range of ways in which you could do that. So you can pop it there into the chat and let us know your rationale for that. Okay, I'm now going to move myself back, reverse. Okay, 40 rising and 5 above the 40. Very good, Chris. Yeah. Nice one. Yeah, that's a nice one. It's always good to hear what people are doing in here as well. It's always interesting to see that. Okay, if we just keep on going here now. My next one down here is, now this is JP Morgan International. This is a very short track record so far. I'm going to take off the moving averages there of the RTs just for clarity, but a very short track record here, and also the volume wouldn't be amazing. So I'm just going to keep on going past that one. Down here then, this is Market Vector Semiconductors doing amazingly well. Interesting though, it's interesting here. So it jumped off, the RT jumped off one, where's that, back in May. The 11th of May, jumped off one. RT now is up at 1.56, which is very, very strong. But also, I'm just struck by here that the CI actually only crossed one very recently, only last week. So big jump up there. That happened in that case too. And have we got a stock split? Yes, we do. A stock split 2-to-1, and really after that there, the ETF is after rising considerably. And let's take one more. Yeah, this is JP Morgan Japan. Again, this wouldn't have a very long track record, only since last November. And the volume there, the volume there is considerably higher. Of course, lots of people are talking about Japanese equity market at the moment. So no surprise there that there is the level of interest that there is, or particularly the performance of the ETFs in that market. No surprise there at all. Now, can I show you one last nuance? If it is the case that you wanted to take this, but you wanted to apply it, let's say, to another watch list that you would create, all you need to do is take here, see where it says stock watch list, is change this, click on that box, and then you can put in there whatever watch list you have instead. And then that very same search, or indeed any search that is in Unisearch, can be applied to that. So whether it's my climate ETF one that I was looking at, or whether it's any of these here, any of these types of watch lists at all, or watch lists that you would create based on the ETFs that you're watching, that's the way in. Okay. And so, as we come to the end of our episode today, right on time, I do want to, first of all, thank you all for being here with me. And I want to finally finish off with, ETFs isn't just about track record and performance. Of course, ETFs need to be driven by a reason that you feel something is. Same as if I was to buy a stock today, I would be buying it because I feel its earnings are going to rise, its PE ratio is going to expand, or perhaps both. So similarly, if I was interested in the Japanese equity market, I must have a reason in which I would be interested in that. And then I would be applying what I'm applying to my analysis as well. My job here today was simply to show you how to use the VectorVest platform so that you can take on different nuances growing ETFs. Perhaps you will find a list of them outside and you want to analyze them. Perhaps there will be some that you will be watching all the time. Perhaps there are new ones and you want to analyze them as you go. Perhaps you have a certain set of parameters like volume, or like comfort index, or like relative timing. Or perhaps you simply want to use the VectorVest. Find the ones of interest to you and you want to extract or exclude certain ones. That was what I had hoped you would achieve today, as well as understanding the fastest growing side of the ETF market. So I want to thank you all for being here. Thank you so much indeed for your lovely messages over here. You're most welcome, Maria. You're most welcome, Siberia visitor. And to each and every single one of you who've chosen to take the time to be here over the past hour, as well as those of you who are going to watch the recording. Thank you so much. I'm going to see you again soon for the next episode of the ESG and Tech Show. And also, of course, I will see you for Savvy Invest. Thank you, everyone.